Yo, what's going on, guys? This is your boy Mrkt the Trader, and welcome back to another video. Now, those of you guys on YouTube, right? You guys have been DMing me saying, Mac, cool, you're into options, great, but where is the Nasdaq trading? Now, I've handed off the mentorship as it relates to Nasdaq trading and futures trading to the other mentors here at Market Mentors. However, in this video, we're going to go through every single position, what you should have done, what you could have done, all right? And if you see the markets like us, all right, and you use the fuel trading model, then you are going to be producing results just like YG did today, all right? You can use this not only on the futures market, but you can also use this within currency for those of you guys who trade Forex, all right? So let's get right into it. So starting off, market open is at 9:30, okay? Now there are specific times of the day, all right, that we expect the market to push. However, you don't necessarily have to trade in between those times. If the market is open, you can still use this strategy and trade every single move if that's what you would like to do. You just have to manage that risk properly. All right, so let's start at 9:30 and let's just work our way down. We're gonna go through each candlestick, okay? I don't wanna waste you guys' time, so we're gonna get right into it. 9:30 market open, what do we see? We have a sweep of buy-side liquidity here. After we have that sweep of buy-side liquidity, what happens? We see that price breaks to the downside here, taking out this swing low. We would have looked to enter the market, but we'll just keep everything simple for you guys so there's no confusion, right? So you would have been looking to enter the market there. As you can see, no entry took place. The market continues to run. We delete that and we move on to the next trade. What you're looking for is a buy-side sweep of, if we're taking sells, what you're looking for is a buy-side sweep of liquidity. All right, just price sweeping a swing high. You're looking for price to then displace to the downside, okay, and completely take out this accumulation. When that happens, we should have an imbalance. Accumulation, manipulation, distribution. Before price fully distributes, we want price to come back into our imbalance and then continue to push to the downside. That's it. That's it. That's all. All right. Now, there are a couple of nuances that do go into the strategy that we don't necessarily talk about publicly, but it's all talked about publicly within the Discord community. But you don't even really need that information, to be honest with you guys. This information that we're going to provide with you guys in this video is plenty for you guys to go ahead and get started making money in the futures market. Keep in mind, Dalen is funded. All right. So we do have a funded mentor. So those of you guys who want to become funded, right, he's going to show you exactly how to do that. All right. Buys, okay, we want to see the opposite. So there's a buy here that I'm about to mark up. Okay, essentially we want to see price coming to the downside. All right, we want to see a sweep of sell side liquidity. Right, then we want to see price take out this accumulation, displace, and then come back inside of the displacement and then run. Okay. You can use the same concept over and over and over again, no matter what markets you're in. Just try it out yourself, all right? And then come back to this video and let me know. Just go ahead and back test it on whatever currency pair you're into, whatever, asset you trade, whatever you trade as it relates to contracts for difference, apply this strategy. All right? So target on this trade, let's see. So 2 standard deviations of that range, 1.5. So 1.5 wouldn't have been enough. We would have had to go for 2. Now, mind you, this is a counter trend trade here, right? We've been bearish all week, so we want to keep that in mind. So we're just going to sit this trade to the side for now and continue running through price action. So this is going to be trade 1. Okay. Now let's look for trade 2. So we see here. Now this isn't as clean, right? We see that price majorly pushes to the upside. So we don't necessarily sweep this liquidity here. All right. We run into it, but we're bearish anyway, right? We're bearish anyway. So we want to keep that in mind. What happens? Price takes out this accumulation here. Okay. And then it leaves an efficiency in the market for us to take advantage of, just like so. This range for our target, 2 standard deviations. Now we're just going to put this to the side for now. All right, that's trade 2. Let's keep moving, right? So we know we're bearish, so we know bearish plays are going to be higher probable. However, right, as you guys saw with me live trading all last year and the year before, you don't necessarily have to just flow within the market, okay? You can simply trade what you see and react to current price action. That is completely fine. Sell side sweep here, then what happens? We have price breaking accumulation. Do we have any type of imbalance here? We don't, right? So we have to look and wait for a possible continuation. Price breaks this high, does not come back into this imbalance, so we continue to move forward, right? Now this is the tedious part of trading, but this is the part of trading that if you can master doing nothing when the market gives you nothing, you will be on the right side of the market more times than not. This is a slight nuance here, right? So this is a little different than the previous positions that we've gone over. However, those of you guys who are within the Discord, okay, you guys know why this area right here would have been an entry for a sell. Select our target. And we can see this was a quick in and out position. These are the positions that I like. Also, I get a lot of questions about Mac. How do you trade so fast? It's magic keys, right? So if I go to this area right here, right, it's going to be magic keys. Okay, it's just a little trading platform that you can connect to your laptop and you can connect to your broker. Okay, and it essentially allows you to take positions very, very quickly without actually having to set everything. Like you just press a button and it automatically sets everything for you based on your parameters. So it's called Magic Keys. Feel free to check them out. I'm not sponsored by them or anything, but I do love the product. Right? So right here, this would have been the target. Beautiful. Absolutely beautiful. We're looking for the same thing, either buys or sells that follow the rules that we went over earlier in the video. And if you guys want me to like do some type of live session on YouTube for you guys to kind of break this down in person, let me know, right? I definitely don't mind. So we can see we have a swing high here. What happens? Price runs on that swing high and then takes out the accumulation phase, right? So where's our entry? Now we don't have much imbalance here, right? So me personally, I would not have taken this here. I would have waited just a little longer. What happens again? Sweep of a swing high. Then we take out the accumulation phase. Perfect, right? What do we have right here? Let's actually zoom in just a little bit. Perfect. You could have set your target, or excuse me, you could have set your stop loss either here or above the entire manipulated range. It's up to you. Now, what are we doing when we are trading this style? We're simply just taking advantage of market structure, right? When the market pulls back, it's going to do something of the sort. Sweep liquidity, create displacement, come back, and then create a higher high, right? If we are bearish, the market's going to do the opposite. We're going to push to the downside, have a retracement, and once we find that lower high, once the market settles into that lower high, you're going to see the same thing. And then you're going to see a lower low, right? And the market does this over and over and over again. The reason being is because not only does it want to leave liquidity behind for price to come back and play with in the future, have a reason to travel back in the future, okay? But the markets have to move like this in order to create and maintain equilibrium. The markets are always equal, always. If you're winning money, someone's losing money. If you're losing money, someone's winning money. That's just how it is. It's a zero-sum game, okay? So let's go ahead and set this target based on this specific move here. We're going to switch this just a little bit. I got a little too excited. There we go. And then we're going to set our target. Perfect, right? 3 standard deviations based on that manipulated range. And we can see target is hit very quickly. Now let's keep going. Remember, buys or sells. It's higher probability to take sells, but we can still take buys. We can still take counter trend buys as long as the strategy sets up and we're able to follow the strategy to a T, right? So let's move on to the next trade. So we see price continues. Then we settle into this area here. So as we continue, what happens here? We have a strong sweep of sell side liquidity. Major rejection with that candle. Okay. A lot of people like to look at it as hammers, things like that, shooting stars. Not really sure what to tell you guys. I don't focus on candlesticks. I focus on overall price action, right? So I understand what's happening in this candle on a lower time frame. It's the same thing that we're going over, right? On the lower time frame, price had a transition here that looked exactly like this. Right? This right here that you guys see, if you guys go to the 1 second, 5 second, you're going to see that right here. Right? That's where you're going to see it. Price takes out accumulation here. Do we have an imbalance? To go long, we do. That would be our entry. Stop loss here. Set targets, range. Perfect. Right? Now let's keep going. Push to the upside. Price comes back down. We settle just a little bit. We're looking for a sell side sweep of a swing low. And then we're looking for an accumulation phase that formed previously to be taken out. Does that happen here? Yes, it does. So we have another long entry opportunity. So I want you guys to see how fluid trading this model can be, right? We have, there aren't a crazy amount of rules, okay? There aren't a crazy amount of, indicators that you have to use and things like that. No, it's simple, it's straight, it's easy trading, guys. It's easy trading. 4 standard deviations, right? Does that happen again? It does happen again here, right? We're just following the market. We're simply just following the market. Winner, loser, it doesn't matter, right? We're following the market. Simple price action. And understand, guys, we're not in these trades for hours at a time. We're in these trades for a couple minutes at a time, in and out, collecting 2% or more. On all of these trades that I'll go over with you guys, it's either going to be a loss or it's going to be more than 2%. Right? We've taken hundreds of these trades, thousands of these trades collectively. Like, we just know it like the back of our hand now. Okay? And once you guys join the mentorship, you guys will see the same thing. So let's just keep following price action. So we have a long position here. For 2.5 standard deviations, right? Now, as we can see, the market reversed on us. Now, what you guys can decide to do, you guys can decide to only take one position at a time. You don't have to take more than one position at a time, right? However, my team and I are comfortable with hedging. So we may be in a buy and then we see a sell opportunity and we will take it, right? You guys who join the Discord, you guys see that take place all the time, right? But let's say you are comfortable with that. All right, let's say you're comfortable with just following the market and using the strategy. All right, we don't necessarily have a sweep of a high here. So this high comes out to be 72.3. This high comes out to be 72.1, right? So we don't have a swing high swept here. However, we do have a swing high that is swept here. Now, does that accumulation phase get taken out? Yes, it does. Right? You can choose to do wicks or you can do bodies. With this rejection here, especially after this rejection, I would have waited for a whole body, right? If you would have used wicks, you wouldn't have been tagged into the trade, right? Now, those small nuances, you guys are only going to learn that by touching base with traders who have been trading this style for years, right? Because we've seen these positions take place over and over and over again. If you guys go back to 2023, right, when I was live trading on YouTube, you guys will see the same strategy. The same exact strategy, the same exact way of doing things. So we see we have this swing low swept. You would have probably been looking for buys here if you weren't following the overall trend of the market, right? So we're just going to mark that up. right? So let's continue. Price moves to the downside. You get taken out here and you get taken out here. Completely fine. Continue moving. Let's wait for the rules to be met. So this is where we have the major swing to the downside. Now, you could have been in this move, right? You could have been in this move. Why? Right? So let's back up just a little bit. Before we take this buy, right, let's finish up the sell. So you had your sell model form here. Stop loss above your swing high. That was your manipulation. We're going to measure out our standard deviations for this trade here. Very simple, very straightforward. All right, so let's continue. Now, if you wanted to hold a runner, you could have held a runner throughout this entire thing. And those of you within the Discord, we had mentors call out this position, right? So you guys should have been in this position for the sells, right? None of the mentors took buys here, okay? So I'm breaking it down to you guys as if, you know, you're a novice, you're new, and you're just following the strategy. I want to show you that you can make money by just following the strategy. But if you want to be on the right side of the market more times than not, that's where the mentorship is going to come into play. That's where the mentors within market mentors is going to come into play. All right. Jarvez called this out. Dalen called this out. I'm pretty sure Yort was in this trade as well. Very good stuff, right? So you could have held a runner all throughout this area. Now let's just continue to follow the market. We're looking for a swing high to be swept. Nothing yet. Nothing yet. Nothing yet. Price continues. Okay, so we find a little base here. Move to the upside just a little bit. We're looking for a swing high to be swept. Price moves back to the downside. Back to the upside here. We did sweep this swing high here. However, as you guys can see, we barely touched it. All right, so let's have patience. Price moves back to the downside. Kind of chops just a little bit, then continues moving. So now we're in a new leg, right? Boom, swing high swept. Now the thing about this strategy, right, you have to have patience to just sit on your hands and wait. That's the hardest piece about this strategy. Sitting on your hands and having the patience to wait for the setup to come to you. Because sometimes in the market, it always feels like there's a setup, right? I know you guys know what I'm talking about, right? It always feels like there's a reason to hop in sometimes. But those of you guys who can have the discipline to not do those things, your account is going to grow using this model here. So there we go, all right? Very simple in and out type of position. We have another swing high swept here. Entry for this trade here. And this is the beautiful thing about this strategy. You can continue to stack trades on top of each other over and over and over again as long as all the rules are met. And there's only 3 rules. That's why I love this trading model. Now, it took us years before we actually learned this trading model, right? It took us years. But once you see the pattern, you can't really unsee it. You cannot unsee it. We have the same thing happen here. Last trade of market open before the market actually closed. So you would have closed this position, all right, before 4, but let's say you would have held it open, all right? Price is now chilling right here. And your target for this position we're gonna have to go down just a little bit. There we go. Would be right here. So let's just calculate real quick, right? Let's just calculate the total return from the market today using the fuel trading model here at Market Mentors. All right, so let's go ahead and calculate this return. So this trade here, first trade of the day, as you guys can see, Well, you guys can't see yet, but let's continue to extend it. Boom, loser, right? So let's go ahead and just mark up minus 1%, right? Next trade of the day, let's see what is hit first. Target. So plus 2.82% because we only risk 1% of our account per investment. So plus 2.82%. Perfect. 1.82. Next position here. Winner returned about 2.35. So now we're sitting at 4.17%. Fourth position returned about 2.43%. Beautiful. Fifth position returned 2.35%. And mind you guys, this happens every day within the market. This does not happen only on the days where, let's say, we don't have, major news drivers. Like if you guys do pay attention to the news and the media, the days where we don't really have a lot of negative media or any positive media on the stocks that are within the Nasdaq, those are the days where we pretty much see consolidation. The days where we have news drivers or event drivers, those are the days where we see the market produce these moves over and over and over again. It has to. That's how it balances itself. That's how it keeps itself balanced, right? So 2.35 added, beautiful. Let's move on to the next one. Winner, so we're gonna add 2.22, perfect. Next position, this was a loser, so we're gonna subtract 1%, 1R. Next position, this added 2.25% to the account, so now we're sitting at 12.42. If you were to take this position as well, that would have been a loss with the hedge. All right, so minus 1, so we're sitting at 11.42. Third to last position, or I should say second to last before the market closed, all right, returned 2.02. And last position returned 2.29. That is 15.73% returned. Now let me just put this into perspective, right? If you guys have, let's just say you guys only have a $20,000 account, right? Nothing too crazy when it comes to investing, but let's say you have about a $20,000 account. That's 15.73% return, just risking 1% of your capital. Let's just figure out those numbers real quick, right? So let's do 20,000, all right? And we're gonna multiply that by 15.73%. Your return today would have been $3,146. Your account balance would have been $23,146. Now, you have to manage risk. Without managing risk, it's going to be very, very dangerous for you guys to just take every single trade that you see. All right, which is why we have within the Discord certain rules for when you should be trading and when you should not be trading. All right, but those of you guys who use the fuel trading model, you will see success. It's not whether or not I think it. You guys can go back and watch the live trading, right? Where we simply just follow the market. That's it, right? Tomorrow, I'm going to be recording my entire New York session, just the AM session since it's Friday, right? Fridays, we either get really good trades or we get bad trades, but we pretty much just have fun with the profits throughout the week, right? So tomorrow, I will be within the markets. I'm going to show you guys what you can do with just using this model over and over and over again, right? And I want you guys to test it for yourself. Don't take my word for it. Anytime you see accumulation phase, a manipulation phase, and a distribution phase, right? Take the trade or backtest the trade, okay, and simply mark it up, right? If you guys want to be able to trade like YG, use the trading model, all right? With that being said, this is your boy Mac. I hope you guys enjoyed this video. Apparently, we haven't really been enjoying the stock option videos all too much, probably because you guys don't really know like what I'm necessarily doing within the market, but we do have a stock options all in one course video coming soon for you guys as well. So I will be breaking down that, and that may make investing into stocks a little easier for some of my followers. All right. With that being said, I'll catch you guys on the next one. Much love. Peace out.